Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert the Herd and Lanny, your favorite dividend investors in all of social media, guys. We've got a debate on my hands here. I've been looking to exit this stock, but I always want to have the next move planned for. What is my capital going into after I sell a stock? So is it time to sell this? Because is it time to buy any of the other two that I'm thinking of?
Love it. Smash that subscribe button. Give this video a thumbs up. Let's talk some dividend stocks today, everybody.
Let's
We love dividend investing. This is going to be a fun conversation. It's going to be a fun dilemma to try and solve for you.
Yeah, guys. I mean, it's not a surprise here. I own 61 positions right now in my dividend stock portfolio account on my Ally investing account, guys. And I've been trimming and trimming and trimming all year long. A stock that I've been discussing and looking to exit for probably a year to 2 years is actually a local stock, is First Energy, ticker symbol FE. They're in the electricity utility space here in the Midwest. Obviously, probably neighboring states, maybe Pennsylvania, West Virginia, probably understand. But here in Northeast Ohio, we definitely do. This all started when, I kind of called that they were going to cut their dividend, almost a decade ago, and then they did. And they just haven't been a performing stock.
Yeah.
Now, the debate is like, is it now the time to sell the stock? I own over 100 shares. So yeah, when I can, I sell some covered calls every once in a while if there's any appetite out there. But we got two stocks that I'd be interested in moving it into. But is it the right time to sell, and is it the right time to buy any of these other two stocks?
Yeah, I think, not to speak for you, but part of what's prompting this is the fact that they're up 10.99% year to date. So you're seeing the stock price rise. And for First Energy, you see them above $40 per share again, which it seems like it's been a long time since First Energy has cut above that threshold. So to do this and to analyze this, we're going to run them through our stock screener. We're going to look at that price earnings ratio. We're then going to look at the payout ratio. We're then going to look at the history of increasing those dividends. And then lastly, we're going to look at that bonus metric, that dividend yield. So let's freaking go, Lanny. Let's talk stocks.
All right, guys, let's jump in. First Energy, again, as Bert said, they are up 10%, 11% this year at 41.51. Expectations are 268. They have a 15.5 price to earnings ratio. The dividend payout ratio, though, is a little bit high, not as high as what you usually see with a utility stock. Because think about it, usually there's not much growth happening within the utility industry, but their payout ratio is only 63% right now, Bert.
Yeah, pretty manageable in that sector. Their 5-year
Yeah.
dividend growth rate is 2.11%. They've increased that dividend for 3 consecutive years now. So low dividend growth, but they're bringing that streak back after they've made their way through, rumbling and tumbling through these tough times.
Yeah, rumbling and tumbling. Now, I said 3 years simply because technically their dividends paid this year will be greater than last year. We are all anxiously waiting a dividend announcement, which will kind of tell us, hey, you know, are they going to increase the dividend again? Even though I think they did it back in March this year, but they've been kind of off the normal dividend increase schedule. So we'll have to see if they do anything here in December.
We are all anxiously awaiting that First Energy dividend
Mm-hmm.
declaration. All
Yeah.
two of us. All two of us. So, all right. Well, with that, their dividend yield now is 4.10. After the price has climbed, it's come down. It's closing in on hovering around that 4% mark. It'd be wild to see if you can get First Energy with a yield below 4%. I think that'd be fascinating.
Yeah. I mean, again, guys, they are down over the last 5 years, 12%, up year to date, 11%, as we said, up 3% in the last 6 months, but down 5.5% in the last month, 24 billion by market cap. So those are the metrics for First Energy. Just kind of pin that right now. Let's go into one of the dividend pretty much kings coming up here. One of the top 5 foundation stocks for anybody's dividend and investing portfolios, Bert. It's time to go and call Thomas Edison, Mr. Light Bulb himself here. Ticker symbol is ED for Consolidated Edison. And, my wife owns this in her account. And, again, they're kind of a boring, but you know what you're going to get, right?
That's exactly what they are. They're namesake after one of the greats, obviously, founder of electricity. We love it. Obviously, I have this light beaming in my face, so thank you, Thomas
Right.
Edison, for that. But see how they run through the metrics, though. You expect them to be at a higher premium, and that's exactly what they are. They're priced at 96.44. PE ratio is 18.06, which is above First Energy's PE ratio of 15.49.
Yeah. I mean, so slightly overvalued comparatively to First Energy, which is a pretty good comparison. Paying $3.32 in dividends for the year. Their payout ratio is pretty similar to at 62%, Bird.
All right, dividend growth isn't the name of Consolidated Edison's game. That 5-year dividend growth rate is 2.32%, and they've increased that dividend for 49 years.
49 years, currently yielding 3.44%, which is actually also below their 5-year average dividend yield of 3.64%. So similar, similar to
Yeah.
First Energy, trading below from a yield standpoint. But stock price is up this year, 4.5%. Stock price is up the last 5 years by 10%, but down 9% in the last month.
So there it is. That's the other alternative number one. You said there was a second other alternative, Lanny, that we both own.
Yeah,
I don't.
on a lot of National Grid, ticker
Hmm?
symbol NGG. So everybody in maybe New York, maybe Massachusetts, Maine, that whole,
United Kingdom.
yeah, UK out there internationally as well. They could be your utility provider. Let us know in the comments if they are. Um, yeah, I own a lot of shares of National Grid. I know you do as well, Bert. They're usually a high flying dividend stock here. But we'll have to see if the metrics make sense as well. Again, this is to look to exit First Energy if that was the right move and to enter into one of these two stocks. Now, Bert, what does that PE ratio look like for NGG?
Their price is 62.75. That gives you a PE ratio of 13.47. So they're the lowest price to earnings ratio from the group. Let's see.
Yeah.
Are they going to have the lowest payout ratio of the group, Lanny?
Well, I just hinted that they have the highest yield here, but their dividend payment is about 351. They pay two semi-annual payments. That's what they just did this year. So 351 over 466, it's a 75% payout ratio. Pretty high. Not what I prefer to see, obviously.
Nope, they aren't a dividend grower either. Their 5-year dividend growth rate is 3.36%, and they've increased it for one consecutive year. Although trends upwards, they're international, so it's always really tough to peg the true number of dividend increases, at least on all the aggregator sites that we use to research these stocks.
Oh, yeah, trend is up, as Bert said, but yeah, because of the ADR international feature, hard to figure that out. But they currently yield 5.6%, similar to the other two, yielding below that 5-year average yield, which is 5.93% for National Grid.
Down 7.48% year to date. Um, up 8.68% over the last 5 years. So,
Yeah, I mean, getting crushed as of recent, down 14% in the last
yeah.
6 months. This back half of the year has been pretty rough for National Grid.
So Lanny, let me
61,
ask you. Oh yeah, you're right. Sorry, I have 61 billion market cap. I was going to ask you the question. First Energy, are the metrics that we talked about for Consolidated Edison and National Grid enough to get you to make the move?
Unfortunately, right now, when I look at this, because I've got, gosh, no, I don't think so. I don't think Ed's low enough because of the yield and the price to earnings ratio. The National Grid, to me, it's I owned a lot of it, but I think I need to see what's going to happen here in 2025 before I feel like National Grid is like, okay, I do want to add more at these prices. I think National Grid, I want to say I was adding like in the 50s earlier. So probably like 15% lower than where they were now. Recently for National Grid, I'll have to look back at the history. Actually, let me look
Yeah.
back now. And then it's Bird. It's like, hey, First Energy, this is where I'm also torn, where it's like, okay, they're rising back. They're trying to make some moves here. Yeah, I was buying National Grid in the 50s, actually even in the upper 40s too at one point. So, but yeah, First Energy, I think what I plan to do, Bert, is just continue to write some higher covered calls. Because if it gets called, at least let me collect premiums along the way before it happens to sell. But I'm not looking to do that just from like as of at the current price to sell.
All right, there it is, everybody. Let us know if you're Lanny. Would you sell First Energy and move it into Con Ed or NGG? Or do you think there's another company that Lanny should be considering? Is there another utility that wasn't featured on this video that Lanny should be considering instead of all three of them?
Guys, let me know in the comments, as Bert said, what stocks are you buying? What stocks are you selling here as the market is riding up well over 25% so far this year, guys? Subscribe to this channel, like the video. Bert, hit him with that sweet chin music.
You're either with us or you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Over.